Hey, it's Thomas Howe with McGrew Real Estate, and today we're going to talk with Annie Myers with Feldmeyer Financial about what financial planners are thinking about these days, what kind of things they can do for you. Annie has been working in financial services for quite a while. She has the privilege of having helped me through some pretty great transitions and really successfully. I know that she works with a lot of care for her clients. She's got great success, and as I say, she's been in on some things that are personal to me and have been very, very successful. So today we're going to talk with Annie Myers with Feldmeyer Financial. Hey, Annie, how you doing today?
I'm great. How are you, Thomas? Thanks for
I'm doing.
having me.
I appreciate your joining me, and we'll just kind of work through a couple of little things here and just maybe help people out there understand what they can do to improve their position with their money, so they can be
Sure.
they can be awesome with their money, as Aaron says. So my first question is this, I work with a lot of younger folks, both couples, singles, who are just getting started, who are just, they probably have no plan in place for their financial future. As you would talk to them, or if I am going to be sending them to you, what kind of things would you want to talk to them about?
Absolutely. One of the first things I would talk to them about is the most important thing they have on their side is time. Time value of money is in their corner. While they might feel like they don't have any assets built up or they may not have too much available cash, there's a lot of things that we can do to help them just get started. The hardest part is just getting that ball rolling, getting savings part of their budget, part of their cash flow, working on leveraging some debt they may already have through student loans. Maybe they have a car. There's lots of different avenues we can do to help them start their lifelong savings. So that's the first thing I would advise. Many people come to me in a position where they're ready to buy their first home. And that's an exciting, fun thing to do. There's some tips and tricks that I like to talk to first-time home buyers about financially. One is to make sure that they're really committed to living in a home for at least 5 years. Typically between closing costs and moving expenses, it takes at least that amount of time in order to at least break even.
And don't forget realtor fees.
That's true. Realtor fees. Those are worth it. And I'll get to that a little bit later about the cost of realtor fees. But I think it's important for people to really make sure that they're making a commitment that is at least a 5-year commitment. Many times they get itchy feet or eager to buy if they've been renting for a while. However, it's a lifestyle, and if they're renting and they're moving around and they're renting for a few years here and there, I think that is a more important step than buying a home, living there for 2 years, moving somewhere else, and buying another home. So financially, I try to get people where they're in a position to make a pretty permanent decision.
Good. Yeah. I like to say, with regard to what you were talking about first time, and this is an old adage, when was the best time to plant a tree? Well, that would have been 10 years ago. What's the second best time would be today. So to start
Right.
thinking about your financial down the line, probably today is the time to start. And another thing that in one of the courses that I took, the instructor said, never leave the house with $1 in your pocket. So when I go home at night, I take all my singles and I put them aside. And then that goes into an account. And that's the kind of way that somebody could start building that little nest egg so they can start putting a little bit aside each month. So never leave the house with $1 in your pocket. It's kind of a fun little thing.
I like that.
I end up with a whole
I like
bunch
that.
of,
And every penny counts. It all adds up.
Every penny counts. Great. So, another part of my client base has to do with people who are established, people who maybe they already own a home, maybe they already have a good bank account, but don't really have a clear vision of where they want to be at the end. What does the cake look like when it's baked? So what advice would you give to somebody who might be more established, who might already, be in a place that they've got some significant assets and just need some help putting that together?
I think what I see of people in that position more than anything is they have this desire to pay their home off. In today's day and age, that's not necessarily as important as it used to be, a generation earlier.
Yeah.
So my advice to them is to not be too concerned about that. You can always borrow money for living expenses, for home, but you can't borrow money for retirement. So my advice would be to make sure that they are maximizing their retirement savings before they get too concerned about making a double mortgage payment or other, even some other debts. Again, with the time value of money and having money or your assets compound themselves is much more important to get that savings now than it is to be concerned about paying off a home. So I would say that's one of the things that I see pretty regularly is that concern about a mortgage. The other thing too, like I said, is really maximizing their investments, maximizing how much they're contributing to their retirement, they're contributing to their workplace retirement accounts. And there's lots of different avenues that we can use and we can strategize to make sure that that's happening. But many times I see people get very concerned about borrowing, getting concerned about paying all of that debt off when the bigger concern is making sure that they have a good savings underneath them.
Right. Yeah. When interest rates for mortgages are at 3% and the return in the market is 4.5%,
Mhm.
it's not found money, but it's certainly the wiser decision to put the money where it will do you the most good. That's certainly good advice that I've heard in the past. So,
I agree.
in your profession, there are trends, there are topics, there are things which people have been talking about. We
Mhm.
all hear about the economy on the radio or in the news. We hear about inflation. What's going to happen there. We hear what are the trends and topics that people in the financial planning industry are talking about these days.
Sure. Probably one of the hottest markets right now, as I'm sure everybody has heard of cryptocurrency. We
Mm,
get this question on a very regular basis.
yeah.
Should I be investing? Should I buy Bitcoin? Should I be investing in cryptocurrency? And our answer is cryptocurrency can be fun, but it's certainly not a place to hang your hat. It's not something that we know long term what's going to happen with it. We don't know. There just hasn't been enough history. So my advice is to definitely make sure that you've got a retirement plan in place, that you've got good savings in place. And if you want to dabble in it, then that can be something fun to do, but it's not something to make long-term plans on. We also saw in the last year and a half with everything going on in the pandemic, quite a few people investing in Robinhood accounts. That's a new trend as well. My concern with that is that you're going to get people who don't know what either they're going to do to depend on those finances to be available to them, or they're going to not understand tax consequences.
Could I back you up just a step? Can you explain
Yes.
Robinhood accounts?
Sure. So a Robinhood account is an available investment vehicle for people to invest on their own. So they can buy individual stocks, they can buy individual currencies, they can buy all sorts of things and not necessarily understand why a certain stock might be valued at what it is, what could potentially happen. They're putting a lot of money into these and overinflating stocks. So what happens is something looks like it's a really good deal and it's not. So unfortunately, we see these things in the news. We see these things in all sorts of different places where it's just not really what it seems to be. So our advice would be not to hang your hat on it.
The GameStop thing was just
Yes.
really big. I mean, that was 6 months ago. Oh my gosh, you couldn't turn on the
Yes.
TV or without hearing about GameStop. And I think that's probably one of those kind of things. It felt to me like it was based on vapor. I didn't feel like there was an awful lot underlying what was going on there. What else are you hearing out there?
Some other things that we're hearing, a big one I get on a pretty regular basis is the concern of student loans. So many people have quite large student loan balances. I like to work with clients regarding student loans because there's a lot of flexibility that can be done. Too many times I see people getting very concerned about paying those loans off and again, foregoing their savings or foregoing other things that they plan to do in their lives because they want to remove that debt. Well, I understand that it can be scary to have a $600-700 a month student loan payment. There's a lot of flexibility that can be used with those loans. So that's one thing I see people getting very concerned about. The other thing to your statement about low interest rates is whether it's a car, whether it's a home, right now, while interest rates are low, it is a good time to leverage that and to use it. So, whether you're buying a home, whether you're buying a car, this with the low interest rates right now, it's a good time to do that while still continuing to make savings and still continuing to contribute to savings. So there's some leveraging that can be used while those rates are low. Inflation, to your point about inflation, many times too, on the opposite spectrum, we see very, very conservative investors that might be shy to get into the market. While inflation rates could potentially rise, again, nobody knows, but if they potentially do, putting your cash under a mattress or in your bank account is not going to keep up with inflation. So in the long run, you're losing money. So I really like to work with people to talk to them about conservative investment strategies, so that at the very least they're keeping up with what's going to happen over the next 10 years regarding inflation.
Cool, great. So in the late 90s, the real estate industry was really concerned about what was going to happen with the internet, with online brokers, with data release. And they referred to it as the lion coming over the hill. In other words, a danger that you couldn't necessarily see, but that was approaching. Do you, in financial world, do you see a lion coming over the hill? Is there somebody or some trend that raises danger signals for you?
I mean, there potentially could be. I mean, certainly nobody saw a pandemic coming over the hill, so that was something that nobody saw coming. The other thing could possibly be, rising interest rates, inflation rates, tax rates. Any of those could potentially come over the hill and surprise us. So we do what we can now. Again, starting savings, getting retirement built up, borrowing at lower interest rates while we can. There's a lot of strategies that we use with our clients in order to maximize tax-free investing, whether it's investing in a Roth account and getting that now while the tax rates are where they are, because at any point those could increase. And if those increase and you're paying more on tax-deferred money, then in the long run, that's another factor that we have to consider. So any of those lines could be on the other side of the hill at any given moment.
Got it. Great. And as you're talking to your clients these days, are there things that you're saying, definitely do not do this? I think you and I have talked in the past about, don't take your cash and put it in a coffee can and bury it in your yard. That's not going to help you. Are there definite do not do's that might be of value for people to hear?
I am a big proponent about building a team. So I would say do not do a lot of things on your own. Too many times, I think in today's day where we have access to everything at our fingertips, whether it's Zillow for real estate or Robinhood for investing, there's just so many layers of all of these industries that people don't understand or know. So I would say do not go out and do this on your own. For trying to forego expenses or fees or any of those things is not a long-term way to go about it. I believe that it's important to make sure that you have a team of, whether it's a realtor, a lender, an accountant, a financial advisor, an estate planning attorney, all of those people who are in your best interest, having them all on your team and really using them for what their power is, and having them all know and introduce them to each other so that everybody knows the bigger picture of what you're trying to accomplish, and getting those people in your corner is my best advice. So whatever that fee may be or whatever that cost may be, in the long run, it's going to be worth it.
So in my when I do an initial buyer consultation with somebody who's expressing an interest in buying a home, I always say the very first step is create strong alliances. And one of those, of course, is an agent to help you go through the process and to guide you along and to give you judgment and advice and counsel. And the other one is somebody to talk to about money, whether that person be your financial planner, and that's a really critical piece of the puzzle, or whether it's a mortgage lender or a banker. Somebody to talk to about your money is really going to help. And so I think that's great advice. Are there any things that I haven't asked you? What should I be asking you today?
No, I think you covered it. I believe the power in, a few things. One is not to be afraid of debt and being able to manage and really use it. Again, while interest rates are low today, So whether it's buying a home, whether it's buying a car, whether it's student loans or any of those things, a good financial advisor will be able to help you navigate that. The other thing definitely is building your team, making sure that you've got all those powerful people in your corner. They're working in your best interest. And in our role as financial advisors, it is our responsibility and our duty to make sure that that's the case. So I enjoy and I love knowing that I'm helping people be able to make their dreams come true, and helping others to make that happen.
You know,
So I think you covered it.
There's that technical term that both you and I use in our practices, which is that we act as fiduciaries, right? I mean, we act as fiduciaries. That's what we're supposed to do, which means putting our clients' interests above all others, including our own. And so the difference between a fiduciary and a functionary is pretty high. So I really appreciate the care and effort that you put into representing your clients' interests. And I really appreciate the time that you shared with me this morning. I hope that you have a delightful day, and thanks for your time. I really appreciate it.
Thank you. You too, Thomas.
If anybody wants to get in touch with you, what's the best way?
Our office is located at 832 Pennsylvania. The best way would probably be you can reach me on my phone, which is area code 425-753-0222, or my email address, which is Annie@feldmeyerfinancial.com, or visit our website at feldmeyerfinancial.com.
Right, and I'll post that in the notes below so that if anybody wants to kind of chase that, I'll have it there for you. Annie, thanks for your time. I greatly appreciate it. I hope you have a fabulous day.
You too, Thomas. Thank you.
And if anybody has questions about real estate, you know my phrase, which is real estate questions. Here's Howe. Thomas Howe with McGrew Real Estate. Thanks for watching. Bye-bye.